What happens if you don't pay credit card debt in the USA? Most people think missing a credit card payment is no big deal. Maybe you forgot. Maybe money was tight this month. You tell yourself you'll catch up next month and everything will be fine. But here's the truth: the moment you miss that payment, a clock starts ticking. And the longer that clock runs, the worse things get. In this video, we're going to walk you through exactly what happens, step by step, from day one all the way to lawsuits, wage garnishment, and beyond. Stay until the end, because we'll also cover your options, because no matter where you are in this process, there is always a way out. Day one, the moment you miss a payment. The very day your payment is due and doesn't go through, the consequences begin. Even if you're only a few dollars short of the minimum payment, your credit card issuer can hit you with a late fee immediately. Now, the law does set limits on how high those fees can go. The first late payment can carry a fee of up to $30, and every late payment after that can cost you up to $41. That might not sound catastrophic on its own, but it's just the beginning. What many people don't realize is that if you were enjoying a 0% introductory interest rate or any kind of promotional APR, missing even one payment can instantly cancel that deal. Overnight, your interest rate can jump to the full penalty rate,
30
and that
days
changes
late,
everything
your
about
credit
how
score
fast
takes
your
a
balance
hit.
grows. If you manage to pay within a few days of the due date, your credit score will likely survive. But the moment your payment crosses the 30-day mark, your credit card company is legally permitted to report that missed payment to the three major credit bureaus: Equifax, Experian, and TransUnion. And when that happens, your credit score takes a serious blow. We're talking a drop of 50 to 100 points from a single missed payment. That might not mean much to you right now, but consider this: your payment history makes up 35% of your entire credit score. It is the single biggest factor. A damaged credit score means that when you apply for a car loan, a mortgage, or even a new credit card down the road, lenders see you as a risky borrower. That translates directly into higher interest rates, worse terms, or flat-out denial. One missed payment today can cost you thousands of dollars in extra interest over the next several years. 60 to 90 days late, the penalty interest rate kicks in. By the time you've gone 60 to 90 days without making a payment, your credit card company has likely made a decision about your account. They're going to raise your interest rate to what's called the penalty APR, and this rate can be as high as 29.99%. To put that into perspective, average credit card interest rates are already around 20%, which is high. But at 29%, a $3,000 balance that you're not paying down will grow by roughly $900 in interest every single year. And because interest compounds monthly, you're paying interest on top of interest. Your balance doesn't just grow, it snowballs. On top of that, your credit card company will almost certainly close your account entirely at this stage, permanently cutting off that line of credit. 90 to 180 days late, debt collectors enter the picture. This is where things start to feel very real for most people. After around 90 to 180 days of non-payment, your account will likely be charged off and sent to collections. Now, the term charge-off is one of the most misunderstood phrases in personal finance. It sounds like the bank forgave your debt. They absolutely did not. What it actually means is that the bank has written the balance off as a loss on their internal accounting books, and then either handed it to their own collections department or sold it to a third-party debt collection company, often for just pennies on the dollar. That collector now legally owns your debt, and their entire business model is built around collecting it from you. Expect phone calls, letters, and emails, sometimes multiple times per day. Under the Fair Debt Collection Practices Act, collectors are allowed to contact you frequently, as long as they follow certain rules. They cannot call before 8 in the morning or after 9 at night. They cannot threaten you with things they cannot legally do. And if you send them a written request to stop contacting you, they must comply. But the debt itself does not go away just because the calls stop. 6 months to 2 years, lawsuits and legal judgments. This is the stage that shocks most people, because many assume that credit card debt is unsecured and therefore creditors won't bother taking you to court. That assumption is wrong, and it can be devastating. Major creditors and debt collection companies like Capital One, Discover, Midland Funding, and Portfolio Recovery Associates file thousands and thousands of lawsuits every single year against people with unpaid balances. If they sue you and win, Or if you simply ignore the court summons and don't show up, the court issues what's called a judgment against you. And with that judgment, creditors gain access to some very powerful legal tools. The first is wage garnishment, where your employer is legally ordered to take a portion of your paycheck, up to 25% of your disposable income, and send it directly to the creditor before you ever see it. The second is a bank account levy, where the creditor can legally freeze and drain your bank account up to the amount you owe. The third is a property lien, where a legal claim is placed on your home or vehicle, meaning you cannot sell or refinance that property without first paying off the debt. Thousands of people lose these cases every year simply because they never opened the envelope. What cannot be taken from you? Now, here's some important relief. Not everything can be taken from you, even if a creditor wins a judgment. Federal law protects Social Security benefits from being garnished by private creditors like credit card companies. No matter how large your debt is, they cannot touch your Social Security income. Beyond that, every state in the country has what are called exemption laws. These protect a certain amount of home equity, a personal vehicle up to a certain value, and basic household necessities from being seized. The specifics vary widely by state, so it's worth knowing the rules where you live. But the point is, even in a worst-case legal scenario, you are not left with absolutely nothing. The 7-year credit report rule. Every negative mark connected to unpaid credit card debt, late payments, charge-offs, collection accounts stays on your credit report for 7 years from the date of your first missed payment. 7 years is a long time. During that period, renting an apartment becomes harder because landlords check credit. Getting approved for a car loan becomes more expensive because lenders charge higher rates to risky borrowers. Qualifying for a mortgage may be nearly impossible. And in some industries, employers run credit checks as part of their hiring process, meaning unpaid debt could even cost you a job opportunity. This is why acting early matters so much. The longer you wait, the longer the damage follows you. The statute of limitations, when debt becomes time-barred. Here is something that the majority of people dealing with old debt have never heard of, and it could be extremely important to your situation. Every state has a statute of limitations on credit card debt, which is a legal deadline for how long a creditor has to sue you to collect. This clock starts running from the date of your last payment. Depending on your state, this window is typically between 3 and 6 years. Once the deadline passes, the debt becomes what's called time-barred, meaning a court will not allow a creditor to win a lawsuit against you for it. However, there is a critical trap here. If you make even a single partial payment on that old debt, or in some states simply acknowledge in writing that the debt is yours, the clock can reset entirely. That means a debt you were almost legally free from suddenly becomes collectible again for another full statute of limitations period. Never make a payment on old debt without first understanding the rules in your state. Your options if you can't pay. If you're watching this and you're already in debt trouble, the most important thing to understand is this: you have options. The worst thing you can do is ignore the problem. Here's what's available to you. First, call your credit card company right now. Many issuers have hardship programs specifically designed for people in financial difficulty. They may temporarily lower your interest rate, reduce your minimum payment, or even pause payments for a period of time. You won't know until you ask. Second, consider debt settlement. This is where you, or a professional negotiator on your behalf, contacts the creditor and offers to pay a lump sum that is less than the full balance. Creditors frequently accept this, often settling for 40 to 60 cents on the dollar, because getting something is better than the risk of getting nothing. Third, nonprofit credit counseling agencies can negotiate lower interest rates on your behalf and roll all your debts into a single monthly payment through a debt management plan. This doesn't erase the debt, but it makes it far more manageable. And fourth, if your situation is truly severe, bankruptcy is a legitimate legal tool. Chapter 7 bankruptcy can completely discharge credit card debt and immediately stop all collection calls and lawsuits through what's called an automatic stay. Yes, it stays on your credit report for 10 years, but for many people, it provides a genuine fresh start when there is no other realistic path forward. Outro. Here's the bottom line. Credit card debt does not disappear on its own. It doesn't get better with time, it gets worse. The fees grow. The interest compounds. The credit damage deepens. And eventually, the legal consequences can reach into your paycheck and your bank account. But at every single stage of this process, you have choices. The earlier you act, the more options you have and the less damage you take. If you're struggling right now, reach out to a nonprofit credit counselor or consult with a bankruptcy attorney. Many offer completely free consultations. And remember, this video is for educational purposes only and is not legal or financial advice. If this video helped you understand what's at stake, share it with someone who needs to hear it and subscribe for more financial information that actually matters. Thanks for watching video and do not forget to subscribe to my channel.